An index fund is a way to invest in the whole market at once instead of betting on one company. Think of it like this. Picking individual stocks is like betting on one player to carry the whole game. An index fund is like betting on the entire league. One tanks, the others cover it. You're spreading the risk across hundreds of companies automatically. The reason financial advisors won't stop talking about them is threefold. They're cheap, low fees compared to actively managed funds. They're low effort, you don't need to watch the market obsessively. And historically, they've outperformed many professional investors over the long run. Like, the guys getting paid to pick stocks often do worse than just buying everything. You don't need to know anything about finance to use one. You just put money in consistently and let time do the thing we talked about with compound interest. Basically, an index fund lets you invest in the whole market at once, keeps fees low, and historically beats most people who try to be clever about it. I've picked you the most relevant video to watch next, or pick the playlist and watch the whole series. It's your call. Please subscribe.